Hi, my name's Tom Elliott, Director of Beulah Capital. With me is Beulah's Chief Investment Officer, Dr. Peter Mavromatis, and welcome to the March quarter capital markets update. Well, it's been a very interesting quarter. We've seen a strong rebound in commodity prices. The prices of things like iron ore and oil have rebounded. Also, we've seen a lot of volatility in the share market. We'll talk about that more in a moment. And most recently, since the end of the quarter, for the first time in quite some time, we've actually seen deflation here in Australia. That's right, the CPI for the March quarter was down 0.2%, annualised inflation now just 1.3%, and that has reopened the door for the Reserve Bank of Australia to cut interest rates again. Well, Peter, looking at the share market at the moment, in our main equities portfolio, what were the standouts during the March quarter?
Yeah, so the best performers there, Tom, were Amcor, Transurban and JB Hi-Fi. Those companies did well for a variety of different reasons. Transurban is constantly in demand, particularly by overseas funds who are looking for companies with monopoly assets, particularly in infrastructure, where Transurban dominates the domestic toll road landscape.
And of course, I think here in the state of Victoria, where Transurban has a lot of toll roads, the fact that it's been hand-picked to build a new toll road, that of course being the Western distributor, is good, because Transurban's offered to fund the Western distributor if it can lengthen and increase its tolls on other toll roads here in Melbourne. So good news for Transurban shareholders.
Correct. And that really was, as Tom mentioned at the start, one of the more volatile quarters we've seen, really almost in history. In the first 6 weeks of the quarter, the ASX 200 was down by fully 10%, which is really quite extraordinary, before staging a strong rebound in the final 6 weeks to be down by only 2.5% to 3%. So our stocks got pushed around, but because we're invested relatively defensively, the volatility of our growth portfolio was actually much lower than the market.
Right, good to hear. Now, what about the takeover target portfolio? What stood out for you there?
Well, the big performers there, Tom, were South32, which benefited strongly from the increase in commodity prices.
And of course, South32 was the spin-off of BHP about a year and a half ago.
That's correct. So South32 finished and was our top performer for the quarter. Iris, which is successfully expanding its business throughout the UK and globally more generally, also performed well, as did Aurora, which was the spin-off from Amcor and was a recent addition to the portfolio.
All right, so it looks like the March quarter was a good quarter for spin-offs. Anyway, of course, another portfolio we run is our income portfolio. We invest in stocks that have higher than average dividend yields, and in some cases we also write call options against them to generate further income. And of course, for people who are near or in retirement, income is super important. Now, a couple of new entrants to that portfolio which did well over the quarter were, of course, Harvey Norman. There was an improvement in consumer sentiment since Christmas. Another one was Flight Centre. Now, Flight Centre is interesting because it's fairly beholden to movements in the Australian dollar. The A-dollar was, of course, a fair bit stronger over the March quarter. This meant that more Australians could travel overseas, and Flight Centre's share price benefited handsomely from that. Thanks for your company. I'm Tom Elliott.
And I'm Peter Mavromatis, and we'll do it all again next quarter.